What's up, everyone? My name's Robbie. This is Robbie and Manila, and today we're talking about PayPal. So welcome everyone to the channel. If you're new here, I go through a bunch of different videos on the stock market, ETFs, general investing, personal finance, and this is one of my videos where I actually analyze a stock. So what I do in these videos is by the end, I do show you exactly what I think the stock is worth. I actually give a price target for myself that I think it's worth. Of course, this isn't financial advice. Do your own research. I don't know what inputs you think would happen with the stock, but this is what I think, and this is my opinion. So by the end, you'll see something like this. So for PayPal stock specifically, we're going to do a discounted cash flow. We're going to do a price to sales valuation and an EV to EBITDA valuation. Now, as you can see here, we're not going to do a dividend discount model because there's no dividend that's paid by PayPal, so we can't do that. But we're going to take a weighted average of these different valuation methods to find the stock price that PayPal should probably sell for. Now, as if this isn't already enough, I also created a proprietary stock scoring system that we're going to go over as well. I call it the CAT 5 score. It goes through 5 different categories. We actually compare it to the industry averages and a bunch of these things. Lots of good stuff coming up, so hope you stick around, watch the video, and let's figure out what the price of PayPal should probably be trading for. So anyway, okay, let's go ahead and talk about a price to sales valuation. Let's figure out what the price of PayPal should be based on this methodology. So what we're going to put in this forecast is we're going to say, okay, we think PayPal is going to reduce shares by 0.35%. It's really nothing, but it's going to give a very, very small boost to the rates of return because they're buying back shares. So step 2 of this process is to figure out the sales growth forecast. So what we do here is we got to figure out what we think the sales growth is going to be. So in percentage terms, what do we think is going to be a proper growth rate going forward for PayPal? So we can go over to the CNBC article. What's going on here is basically PayPal is kind of walking back some of their guidance they're reducing their guidance. They had higher guidance of 17.9%. Now they're saying, well, it could be as low as 15 up to 17%. So what I'm going to do here is I want to be more conservative, and I want to go with a 15% growth rate of revenue. So that's reflected here where it says 15%. That's the growth rate we're going to use for 2022. Then the following year, I'm also using 15%, but I'm actually being even more conservative here. I'm reducing this to 12%, then 12, then 10. What this all kind of does is it brings us to this pivot table of potential outcomes for PayPal. And so I'm actually going to go with something kind of what I think is conservative, which is the median, which is 7.5%, or sorry, 7.5 times sales. 7.5 is what I'm choosing. That's $185 price target, basically $185 per share. And here we have it growing 2023, 2024, 2025. So we have growing to at 7.5 times $297 per share. Then we go down here. What is the rate of return of these? So this is the forecasted rate of return, step 4. So for me, if I'm going with a 7.5 in 2022, at the end of this year, it's a 73% return for the stock. And by 2026, it equates a 22% annualized rate of return, which would be a fantastic annual rate of return over that time period. So all right, we got our first price target. $185 per share is what we got. Next up, we're going to go through the EV to EBITDA. We got to find the shares outstanding, so we're doing that. It's the same thing as we did before for the price to sales ratio. Now we have to figure out the EBITDA growth. So EBITDA growth, I'm actually going to go ahead and just be very conservative here. I'm going to use a 15% like I did before with the price to sales. So we got 15%, 15%, 12, 12. By 2026, only growing at 10% per year. That's EBITDA is growing at 10% per year. Step 3, which is we need to figure out the EV to EBITDA multiple. What I'm doing here is I'm basically saying, okay, let's go with the median here, 30 as the multiple, because I'm using just the median. It's even less than the average, so the median multiple, 30. Again, this is 2022, what the stock price would be, $166 per share would be the stock price in this scenario by 2023, 191, all the way up to 267 by 2026. 2022, at a 30 multiple, we have here 55.89% rate of return. If this was to happen and I'm correct, this is what it would be. So essentially, what I think is the stock should be worth in this valuation methodology $166 per share. So far we've gone over the two different price targets that we have using price to sales, EV to EBITDA. They are both significantly higher than the stock is selling for right now, which is a very good sign, which means maybe PayPal is going to be a buy in my opinion. So the next thing I'm going to do is just go through my ranking system, my quality score that I've created. So this is the Cat 5 score. It's 5 categories. The first one we have is called the Rolex score. So we want to figure out first the F score, which is Piotrowski F score. So it got a 6 out of a potential 9. I'm okay with it. A 6 is passable. When it's down there in like the 4, 3, 2, that's where I get really concerned and don't like it. So this actually gets 2 points out of 5, so it still gets an okay score. And then shares outstanding, we don't want them to be increasing. We want them to be decreasing or not increasing. And so they're decreasing, so this gets a full 5 points. This gives us a Rolex score of 70%. 70% and higher is what I want in all of these different scores. So this is a pass. Next thing we have is an industry-based valuation. So what I do here is we use a decile system. And so I'm going to show you what the PE ratio looks like in a decile system. So for example, the actual PE ratio is 30.35 for the company. And this is the 5th decile compared to its industry. So let's go over here. I'm going to show you what this actually is telling us. So these are the PE ratios of all of the different deciles of all of the companies in the same industry. The average PE ratio in the whole industry that PayPal operates in is 75.60. The median is 32.43. We just sorted them into deciles, so we rank them into groups of 10, and we're saying, where does this fall? So at 30.35, it falls over here between 5 and 6, so this is the 5th decile. So it's right in the middle, so it does still get points, but not a full score. So let's go back. You can see it's got a 5, 5th decile. That's the PE ratio. It gets a 2 out of 5. The forward PE is actually in the 7th decile, so it's at 18.3. That gets a 2. The price to sales ratio, which we just talked about, is in the 7th decile, gets a 2. Price to free cash flow, it's in the 5th decile. It's 21.64. It gets a 2. So the total possible, 20. This gets a 40% for a peer valuation score, a little bit lower than I like to see. Next, we have the industry-based profitability. So decile 4 for gross margin, that's very good. So that's a 47% gross margin, a score of a 5. That's the best score you can get. Then net margin is decile 1, really good net margin, 5, score of a 5 out of 5 potential points. Awesome. It gets a really good peer profitability score. This company does a good job with profitability, with gross and net margins. Next up, we have the industry-based growth, so the 5-year compound annual growth rate of revenue, earnings per share, and free cash flow. So the first decile, its revenue is in the first decile of growth, which is really good. We saw that before. That revenue growth was great, 18.5%. The 5 is the score for this one, 5 out of 5. Earnings per share, second decile, really good, 25%, 5 out of 5. Free cash flow growth, this one was 5.74, not as good, but actually here's the thing. If we go back a little further on the free cash flow growth, we're going to see a bit of a different story. So it's probably more to like 20 or higher. So this is actually going to get a full score. So full score, boom. So it actually does get 100% on the pure growth score, the pure profitability growth score. Very good. So then we have liquidity. Liquidity, we just look at the debt to equity ratio. So actually it's got a very low debt to equity ratio. It does very well with debt, not a lot. 0.42. We don't want this more than a 2. So that's good. Full score for debt to equity. That is a score of a 5, 100%. So the total Cat 5 score for PayPal is actually going to be 45 out of 60, which is a 75%. I like this to be 70% or more. This passes the Cat 5 score. So great. This thing is looking good on a lot of fronts so far. The last thing we have to do is figure out how is the free cash flow based discounted cash flow. So we're going to do that now. So I'm on gurufocus.com using the discounted cash flow calculator for this one. I don't know, it's kind of easy and I like this thing. So we're using free cash flow. This is based on 4.578 free cash flow per share is what we're using here. That's the starting point. Now we need a discount rate. I'm going to go with a 9 for my discount rate. And then the growth rate is the next part. So, which is this screen, which shows a free cash flow per share, potential growth rates, median and average. Let's start with the 18%. We're going to put 18% in right here. Growth rate 1.8. And what does that give us? That gives us a margin of safety of 30% essentially. The stock's fair value would be $151 per share. So there you go. So this is the very last thing we have is the weighted average of all of these different valuation methodologies. So what we do is we take the free cash flow based discounted cash flow that we just did. That was $151 per share. Then we take the price to sales, which was $185 per share. Then we have the EV to EBITDA, which was $166 per share. We don't know which one of these is the best valuation methodology to use, so let's take an average of the different ones. We'll take 33% weighting for all of them. What do we get? We get $167 as our target price, and that would equate, by the end of this year, if it were to happen, a 56.85% rate of return. I think the stock is definitely undervalued right now. So let's go ahead and take a look at some technicals on PayPal. Now, if you've watched my channel before, you know that I like to look for entry points. I don't like to just buy a stock when I think it's undervalued. However, if I was the type that did like to invest in stocks just when they're undervalued, then I would probably buy the stock now. But because I like to make sure that the setup looks okay, technically, I wait. The stock has declined almost 70%. It's really crazy what's been going on with PayPal lately. I'm always very skeptical of investing in a stock like this that has momentum to the downside. Sentiment is not going with PayPal right now. So what I would do is I would definitely wait until this stock consolidated. So even though I like this stock from a price perspective, I wouldn't even buy this yet. Let's zoom in real quick. So what would it take for me to be comfortable with an entry point to PayPal? So there's a few things I would look for. First, I wanted to trade outside of the downtrend channel, which is this line here. I want to break up out of this channel. Now what's interesting right now is there are some very major support areas coming up. So it's definitely possible that this acts as some support and the stock potentially consolidates. What would happen after that? Well, there could be a bounce. We have some resistance here at 141. If it broke through 141, there's also a longer term downtrend here. And then there's another resistance up here at 228. What do I think could happen here? I think it could consolidate and trade in this area between, let's say, $70 per share and maybe up to $114 per share. So I would watch this area right here. I would wait to see a resistance in that consolidation area if this does happen. And I would wait for a break up through the resistance. Once that happened, I know that there is my target of the price that I think that the stock is worth, which is about $167 per share. What would that be? Well, if resistance was around 114 in the future, that would be about a 45% upside. Definitely would be very happy with that. So anyway, that's all we got for this video. Hope you liked it. Let me know what you think in the comments below. If you did like this video, please hit that like button, share this video with your friends, hit the subscribe button, and watch another one of my videos coming up on the end screen right now.